Hello, Lanas. It is a beautiful day, right? So today's session, our focus will be on business data analytics, and specifically, we are talking about the revisions. And you guys will be having your exams in a few weeks from now. So at this point, I want us to dissect main areas that we should focus ourselves on more so when it comes to this sitting for business data analytics. You'll find that business data analytics is one paper that you can easily pass on first attempt, actually. So it is important that at this point, we do have a basics of everything, right? So at this point, we'll be having compulsory questions, which these compulsory questions will be under financial reporting and financial management. Whereas you're also having selective questions. Selective questions on of the three, you'll have to select one question. So as it is now, of course, this is 30%, this is 30. And of course, either of the question that you're going to select, it will be allocated 20%. So it is important that at least you should be very good. I understand that a majority of the students they normally tend to fail business data analytics. Why? They assume that they are good in Excel, which is okay. But you'll find that for business data analytics, it is more of you being very good on some functions, which of course, Mwalimu will be guiding us on this session as well. So other than you being good in basic Excel, but there are some functions. You are probably in this case at your workplace, you are using Excel most of the time. But remember, for this purpose, you must be very good on some specific functions, which will enable you to handle this BDA or rather to handle these exams very fast. So at this point, not going deeper into all these elements, what I want us to do today is simply, of course, to handle a question and try to show you guys some of the best functions more so of the questions that we'll be handling, which you must be very good at. So we had looked at a financial reporting and financial management. So our focus will be on the selective questions. Remember, for those who have not joined us for business data analytics doc revision, you can always join us anytime. MDarasa, we provided you with a block revision, which will really help you on this coming exam. That is regardless of which college you've been attending. You can always join us anytime for our block revisions. So looking at this, we are having basically the selective, and our focus basically today will be on management accounting. So in our block model paper, we go to question number 23. So if I told you to check management accounting, even based on your syllabus here, of course, you realize that management accounting has only four main actually segments, other than the sensitivity and scenario analysis. You must be very good when it comes to cost estimation. You must be very good, of course, this is just an estimation. Talk about break-even analysis, budget preparation and analysis, which will also include the variances, and carrying out sensitivity analysis. So these areas you must be very good at. At this point, we realize that majority of these questions have been tested. Talk of cost estimation, talk about aspect of a break-even analysis. Like last time they did cost estimation. So this time, of course, you should expect either break-even analysis or budget preparation. So at this point, we've covered both. So our segment today, I want us to talk about the area of break-even analysis, to carry out break-even analysis. And that is what we'll be looking at in this question number 23 in our block model paper. So these are what you're asked. You are the management accountant in a manufacturing firm. Your CFO has requested you to prepare the profit and loss for the product in the RASA for the month of December 2023, given the following data. So you're having the product in the RASA, which in this case I'm given the units that were sold, the price per unit, you're having the variable cost per unit, you're having the fixed cost here. Then part B of the question you're asked that based on different market dynamics, your CFO will also wish to analyze the profit of the firm under the different level of output based on the maximum production that the company can produce and sell product in the RASA. So the following scenarios are provided as follows. So in this case, I'm given basically our products. So looking at that point, we should be having the scenarios given. Then the required on these scenarios, these are what you're told, like there is a proposal of introducing a new product branded May Connect. There is a proposal of introducing a new product branded May Connect with the aim of diversifying the company operations. This product is estimated to retail at a price of 450 per unit with a variable cost of 350 per unit and a fixed cost of 400,000. Required. Using the above information, prepare the break-even point chart, clearly showing the break-even point in units and in value for product May Connect. Also, you're asked to determine what level of production should the firm attain to achieve the target profit of 1 million for product May Connect. So these are what you're told. Remember, like there's a question basically on just your seating, so you're asked to prepare the IRR chart. Some students were like, oh no, what is this now, right? The same case, you can be asked to prepare the break-even point chart. You realize that it is very easy. So given that task, we start our work by number one, we want to handle part A of this question. So we want to handle part A of the question. Part A of the question basically requires us to prepare the profit and loss, right? Part A of the question, the good examiner wants us to prepare the profit and loss. So how will we go about this? This is easy. So what will be required to do is to consider and have this in mind. I'm going to take our data, the way we are given here. Profit and loss, remember, it is all about our sales minus our costs. Remember the concept of profit. The concept of profit. We'll be talking about our total revenue, right, minus our total cost. In other words, also, the same case can be taken as you talk of your contribution, total contribution, minus our fixed costs. This can also give you what? Your profit. Where our contribution at this point by now, I know you guys, you're very good at this, of course, if you've been attending our classes. So contribution is all about us taking our total sales minus our total variable cost. This is what will give us our contribution. So by the fact that we know this, then we should be able to analyze our profit. So I'm having our profit statement. As per the good examiner, you want us to prepare our profit statement. So my profit statement, of course, will be as follows. I'll be having number one, our sales. Talk about our sales slash revenue that you're talking about, where I'm having my units sold times the price per unit, selling price per unit. We're having our variable costs. So my variable cost here will be simple. I'll be having the number of units times variable cost per unit. So that as at the end of the day, this will give us our contribution. This will give us our contribution, where my contribution will be easy. I'll be having our revenue minus variable cost to give us our contribution. So that as at the end of the day, we'll be having our fixed cost here. So looking at our fixed cost, all you need to do is simply to take the fixed cost that you're given at that point. And therefore, as at the end of the day, this will give us what? Our profit, which I'm having, of course, that minus our fixed cost. So therefore, we can agree that at this point, our profit will be the value that we determine there, which is what? 50,000. So this is our first task, determining our profit, which we have determined at that point. The second question here, we are given, based on the different market dynamics, your CFO will wish to analyze, right? We wish to analyze the profit of the firm and a different level of output based on the maximum production that the company can produce and sell product in Darasa. So let us handle part B. Good students, let us handle part B. So part B, it is all about scenario analysis. This part is all about scenario analysis, right? So we should be having, of course, scenario analysis. And anytime, my good students, anytime you're talking about scenario analysis, what must we always tend to remember? It is very important to remember that anytime we are talking about the scenario analysis, the data table concept will come in very handy here. The data table concept will come in very handy at this point. So a good examiner wants us to determine our profit, or given these levels, given this data, you want us to determine all this, which I'm going to, of course, have it in this, we transpose, so that we should be having it here clearly. These are what the variables that a good examiner wants us to determine based on the units given. So these are what we have. So these are what we have here. Or we can have it with yellow, right? So a good examiner wants us to prepare our variables, which will include the sales, total variable cost, contribution, fixed cost, profit, and of course our total cost, given these scenarios, given this level of units. Our production, these are what you're given. Given this level of production. So you'll find that this will be very easy, because at this point, all you'll be required to do is to remember the data table concept that Mwalimu taught us. So the data table will tell us that I need to identify the variable that we need to change. And in this case, our scenario, it is based on the level of production. So it is the units that will be our determinant. So units being our determinant, and we've literally arranged it in in a columnar form. Then I need to pick our original data. Original data based on the original data based on what we had computed earlier on as per the original set. This was the original set of the company, where our original set, we determine our revenue to be 300. We determine our total variable cost to be 150. We determine our contribution here to be, of course, that was our contribution. We determine it to be 150. Our fixed cost, we determine our fixed cost basically to be 100,000, which ideally it won't change, right? So in this case, I can have basically that. Our profit, I'll be having our profit by taking, of course, our contribution minus our fixed cost. Then we had, of course, our total cost, which my total cost at this point will be our total variable cost plus our fixed cost. So this is what you're having as per the original set, right? So we need to prepare all these variables based on these scenarios that you're given here, you see? So therefore, these are what will be required to do. We apply the concept of data table. So data table will tell me that I need to highlight all this data. After highlighting my data, we come to, of course, our ribbon here. We come to our data, right? We go to TIF analysis. I need to take my data table. My data table, given our dialog box here, we need to identify, of course, our either row input or column input. Which variable are we changing? Which variable do we want to basically change to give us the results or the output for all these variables of ours? We agreed that our scenario was based on the number of units. So it is a production that we are changing. And our production, you can see it is aligned in a columnar input. So what you are going to do, we change our column input. These are what you need to determine. Our column input, we take the original production, which original production here we had 5,000 units. Don't type it manually. Make sure that you pick the formula. So that once I pick the formula, guys, I want you to see this magic. I want you to see this magic with Excel. So just do OK. And hula, it will give me the results in relation to all these scenario. This is scenario analysis that you're doing. These are scenario analysis that you're doing. So you'll find that it will give us the whole results as you're having it here. It will give us the whole results as you're having it at that point, which you are done with that. You have all the marks that was allocated on that. We proceed to part C. Part C, we are told there is a proposal in introducing a new product branded MayConnect with the aim of diversifying the company operations. This product is estimated to retail at a price of $450 per unit with a variable cost of $350 per unit and a fixed cost of $400,000. So I'm having a new product that the company is planning to introduce, and this product is what? MayConnect. This product is MayConnect. So the company is planning to introduce this new product known as a MayConnect, and this is the data that you're given. So on this data, we are told, number one, we are having, of course, our selling price. The selling price of this product is expected to be $450 per unit. The variable cost of the same product is expected to be $350 per unit. The fixed cost is expected to be $400,000 per unit. So this is that is a $400,000 per unit. So this is what we are given. Once we are given this and look at the required where the good examiner wants us to prepare using the information above, prepare the break-even point chart, clearly showing the break-even point in units and in value for product MayConnect. So first thing first, it will be important for us to remind ourselves of break-even point. And break-even point, we can have it in quantity, and you can have the same case break-even point in value. Break-even point in quantity, and you can also talk about break-even point in value. So what about this? Break-even point in quantity, recall we are talking of our fixed cost divided by contribution margin. Whereas in value, we are talking of fixed cost divided by contribution margin times our selling price per unit. These are how we are supposed to determine our break-even point. Reminding you guys that CM here, reminding you that CM, which ideally it is contribution margin, we normally tend to determine our contribution margin by taking our selling price per unit minus our variable cost per unit. This will give us our contribution margin. So given this set, now our fixed or break-even point in value will be easy. Why? I'm having our fixed cost, which in this case, a good examiner has given us to be 400,000. We divide this one by contribution margin, which in this case, contribution margin is all about selling price minus variable cost per unit. So that at this point, you can agree that having our fixed cost and contribution margin per unit, or rather contribution margin, this will give us what? Our break-even point in quantity, which I'll be talking of 400,000 divided by 100 to give us 4,000 units. This is break-even point in value, or rather in quantity. What about in value? In value, all I'll be required to do is to simply take this data that we are having, that is break-even point in quantity. All we need to do is to multiply by our selling price, which our selling price in this case was what? 450. Remember, we are doing this so that this will give us a lead on how we can prepare our chart. So therefore, it is as if you're talking of 4,000 times our selling price per unit, which is 450. So you see, already I'm having a lead on what you're supposed to prepare. We have a lead on what you're supposed to prepare. So this is in value, break-even point in value. So you're having a lead on what you're supposed to prepare. So once I have that in mind, the next step will be easy, my good students, because I'll have to come up with the range because we need to plot, right? So we have to come up with the range values where I'll be required, allow me just to copy paste this. So these are what we should be having here. These are what we should be having here. In this case, I'll just take, of course, my total cost to be at this point and our profit at this point. We need to come up with our range. But the fact that we know very well that to determine our break-even point, I should be having our fixed cost, we should be having a contribution margin. Or rather, talk about what? At break-even point, it is a level of production where my profit is equal to 0, or at break-even point, it is a level of production where our total revenue, break-even point, it is a level of production where my total revenue is equal to our total cost. You see, at break-even point, total revenue will be equal to our total cost. That is to say, at this point, my profit is equal to 0. At this point, our profit is equal to 0. You see, these are what we should be having. So once I have that, I just come and have our range, because we know very well by our computation that break-even point will be 4,000 units, right? So we take 1,000 units. This is just a range that you're coming up. You can take 2,000. That one will purely be upon you. So I'm having my range being 1,000. So once I have that, I can literally drag it to 8,000 will work. Our sales revenue, remember we are preparing this data just to give us, to enable us to plot a graph, which you can come up with. You can come with any range of your choice. So my sales revenue at this point, I'll be having the number of units and the selling price per unit, which we have determined it at that point. So once I have that on the first bit, all I need to do is to autofill. I just double click on that thick cross below on the right, bottom right of our cell. Variable cost, I'll be having my number of units times the variable cost per unit, which was 350. In this case, I lock. Remember, locking is clicking F4. I just drag it at that point. My contribution, of course, will be sales minus variable cost. I drag it at that point. My fixed cost at this point, a good examiner had given us a fixed cost of 400,000. So therefore, in that case, I'll just be, that will be constant all through. This will be constant all through. So that we're having 400 all through. I need to drag this. We copy paste manually, then of course we have it at that point raw. So we're having our fixed cost. My total cost, remember, I'll be talking of our total variable cost plus our fixed cost to give us our total cost. Our profit, of course, will be my contribution minus fixed costs, or simply you can take your total revenue minus your total cost. It will give us one and the same thing, right? So this is what you're having. So I want us to use this data to plot our graph. I want us to use this data here to plot our graph, So how will we go about it? At this point, I know the variables that I need in this case, given the fact that we know very well that at break-even point, it is a point where my total revenue is equal to total cost. And it is the level of production where our profit is equal to zero. And at the same time, determining the same, we're having fixed cost over contribution margin. So the variables to consider, number one, that production, we'll have to consider it. We'll have to consider, of course, our sales revenue. We'll have to consider our fixed costs. And we'll have to consider our total costs in plotting our graphs. So therefore, having noted that one, let us select them, right? So I'll just select my production. We select our revenue. We select our fixed cost. We select our total cost. Remember, we're selecting them at the same time, right? So once we have selected, all I need to do is to come to insert. Then we come to recommended charts. On the recommended charts, I'll pick my line graph here, which in that case, after picking my line graph, I should be having it here. We drag this point, we drag it at this point, just below my data. So we can either select what we need, right? We can select what we require. At this point, I can select that based on, now that one, it will be purely upon you, right? You select the one that you'll find fit. So my chart, this is a break-even chart. This is a title of the chart we are talking about, our BEP chart, break-even point chart. See? So that point, then we can easily come and determine our break-even value, which in this case on our graph here, all you can do is to simply, we can have it at this point. So I need to select, of course, this point here. So once I have this point here, we can always tend to add a call out. So in our call out here, we can all agree that at this point, it is at this point whereby our number of units, in this case, where the level of production, which level of production, if at all you can take our level of production, we're having production should be 4,000 units, and revenue at that level, you're having what? 1,800, 1 million, 1.8 million. You see? So these are what you are looking at. And this is our break-even point. You see how easy that can be in determining our break-even point using our charts, right? So once we have that, I remember there's a point whereby you are asked to prepare IRR, right? Prepare a chart of IRR. Some students were like, now what are these? You'll find that it is as easy as that. So at that point, my good students, that will take us to the next question here, where the next question we are asked to do what? We need to determine the level of production. We need to determine the level of production. So this is our question here. What level of production, right? What level of production should the farm attain to achieve the target profit of 1 million for Product Make Connect? So for us to achieve this 1 million, what must we always tend to remember? So this will be easy. Allow me to, of course, take our profit statement here, the one that we had computed earlier on. we take our variables, which are variables in this case. We're having, of course, these are our variables as per this product may connect. These are our variables. Where with an addition of our units, which units in this case allow us to use the break-even point units, which we've determined to be 4,000 units. See? So therefore, that is to say, to determine my sales revenue, we'll be taking the number of units times the selling price per unit, variable cost per unit. That will give us, of course, the number of units times the variable cost per unit. Our fixed cost here, based on the question, we clearly had 400,000. So that at break-even point, we can all agree that my profit is equal to 0. So we need to determine the level of production which will give us a profit of 1 million. It is important at this point for you guys to remember the concept of goal seek. Do you remember goal seek? It will be very vital for you to remember goal seek, goal seek. So what about goal seek? How do you go about it? You come to your data, what if analysis, we go to goal seek. So at our goal seek here, we want to change our profit. So the set cell, these are profit that you want to change. To what value, my good students? To 1 million. To 1 million. By changing what? By changing the level of production, which in this case is the number of units. So that once I click OK, you'll see the magic. Ra. So for us to achieve our profit of 1 million, I'll be required to produce and sell 14,000 units. That's when you can attain, given all the factors, holding all other factors constant. That's when I'm going to achieve what? Our profit of 1 million. A profit of 1 million. So you'll find that such a question, basically, you can be given to work it out in that manner, and you'll find that it will be very, very easy. It will be very, very easy for us. So I've taken you guys through the steps of scenario analysis. I've taken you guys through the concept of break-even point, as well as preparing our break-even point chart. So these are what you're required to do. In our next segment, of course, we are going to handle question number 25, which is more of taxation. And this time round, remember, we'll be talking about employment income. Last time we talked of a capital allowance. This time round, we'll be talking about what? Employment income. It is important that you have that clear knowledge and understanding. So these are what you are required to do. Remember, you can join us for a block revision anytime, regardless of where you've been doing your studies. You can join our revision for business data analytics, which is ongoing. Just remember to hit this number on your phone, 0708068851. We'll be here to assist you on how you can get the either recorded version of these classes or joining the live virtual of the same. To that point, thank you so much, guys. See you in our next segment where you're going to handle taxation. Bye-bye.